If cryptocurrency crashes in the short term, guess what? I don't care. If stocks crash in the short term, I don't care. If NFTs all crash in the short term, I could care less. And in this video, I want to explain why short-term market moves do not matter to me, and why I believe that if you look long-term, I'm talking 4, 5, maybe even up to 10 years out in your investing strategy, you will make a lot better purchases and you will make a lot more money over the long term. And this is actually why when stuff is down in the short term, it's actually really exciting. It makes me happy. I am glad when stuff is down. In fact, my biggest position, Tesla, I hope it drops another 20%, so I can continue adding at even better evaluations, because the company, it's doing great. A lot of these NFT gaming projects that I'm investing in, the teams, they are killing it. And if the market cap of the coin or the price of these NFTs drop, that is awesome for me. Why? Because I'm grinding away, working hard, trying to create more liquidity so that I can continue to buy into these companies and into these projects that I think are gonna be massive a decade from now. So short-term turmoil, that's actually a great thing. So if you wanna learn a little bit more about my investing philosophy, then make sure to stick around to drop a big thumbs up on this video. Hit subscribe if you're not subscribed already. This video is sponsored by FTX, which I think is the world's best cryptocurrency exchange, and they just launched a new NFT marketplace, but more on them later. Let's get into the video. So let's kind of break through all the facade and stuff and get down to the facts. And the fact is, the reason people invest in crypto, the reason you might be interested in crypto gaming, the reason people invest in stocks, the reason people buy property, the reason people invest at all is because they want to make money. And that means whenever you buy an asset and it goes down, for most investors, that feels bad because you are having unrealized gains, and that goes against everything that as an investor we desire, which is to appreciate, make money, for the things that we invest in to be worth more in the future, not less. And that is why short-term market moves make a lot of people very nervous. And it's also why for a lot of investors, they like to use things like mutual funds or hedge funds that bet literally some of their portfolio against the market doing well, so that if the market doesn't do well, they don't lose as much money. But I think that all of this short-term worry about stuff going down in the short term is terrible, and in the end is going to cause you to make far less returns than if you just stay focused on the long term, buy the things that you have the highest conviction are going to appreciate the most in the long term. And then if you're buying great fundamental things and they go down in the short term, it means you get to buy more, and that is great. But now I want to talk a little bit about the idea of short-term versus long-term investing, because I know for a lot of people, especially a lot of people in crypto, and I'm sure a lot of subscribers of this channel, making money in the short term, being a short-term investor is what you are, and a long-term investor is something that doesn't really sound as attractive to you, because who wants to make money by the time they're 50? I want to make money in my 20s. I want to make all my money now on this trade. And that is the mindset that I think a lot of people have. And when you are a short-term investor, then downward short-term movements are very scary, because all you care about is having more money in the short term. And when the markets are going down, it is very, very hard to do this. And that can cause you to really, really freak out if you don't have your eye on the ball of long-term appreciation, because you own solid assets that are truly adding value to the world. When I first got into investing, I also was one of these people that were like, I want to make some good trades, buy some good companies that are about to go up a lot and make some money. And that's how I thought you did it. But because I'm someone who really likes to educate myself about how people have been successful or unsuccessful in the past, because I really like learning from others' experiences, especially with financial things where there is a lot of experience that you can learn and you don't have to make the mistakes yourself. I love being able to learn from others' experience. So the first thing that I did when I wanted to get into trading, getting into making money in stocks and crypto, is I decided to read some books from the most successful investors of the last century. The most successful investors of the last 100 years. I was like, these are the people that I want to read books from. So I went based off of investing success and looked for books from those people. And that led me to people like Warren Buffett, Peter Lynch, who ran the Magellan Fund and had insane returns there. I love Peter Lynch as an investor. And what I started learning from all of these different people whose books I was reading was that the way that they made money was not short-term trading, it was actually long-term investing. And I thought that was really interesting until I started to understand why you could actually stack billions or millions a lot faster long-term investing than you could short-term investing. And there's a couple reasons that I will mention in this video, but some of them really started to blow my mind. The first was the idea of compounding and being able to have compounding gains that are untaxed because you're not selling. So if you guys don't know, as a short-term trader, you're kind of fighting against the government in every single move that you make, because even if you're a super successful trader, it's even worse if you're a super successful trader, especially if you live in a state like California, where even California wants like their 13% or something. You can easily have to pay 40, 50%, yes, half of all of your gains in a year to the government, to the tax man. And that means that you have to make so many more successful bets in order to like appreciate the same amount of money that someone who's been like compounding for years and years and years is gonna be able to make by doing nothing. You have to make so many successful bets in order to like actually make a good amount of money that you can really profit and reinvest in the next year. But then the second thing is, every single year, you have to repeat this. That means you have to make a successful bet not one year and like really good trades one year, but then you have to do it the next year. And then the next year you have to do it. And the next year you have to do it. And if in any year you start making a couple bad decisions, guess what? It absolutely destroys how your wealth building goes. Now, compare this to long-term investing, to people that don't really care about the short-term moves of the market, but instead are investing in companies that they see have really long-term growth, big impacts in the future. And like for me, I'm looking for what is going to really be massive a decade from now, which is why I'm really excited about gaming with real player ownership on the blockchain. It's why I'm super excited about Tesla, how they are creating electric vehicles, which I believe is the future of transportation. But what makes me even more excited about Tesla is that they're moving towards the future of transportation with autonomous vehicles and having vehicles that can drive themselves. My Model Y in my garage can literally drive itself. I could like say, go to Whataburger and it will drive me to Whataburger, drive me back, zero interventions. Like this is the future. It's going to be massive in 10 years. So like I said, if Tesla goes down in the short term, does that make me sad? No, I'm excited. I get to put more assets into the company at even a lower valuation when the actual company itself is just growing year after year after year. And there's like no end in sight for that. Like that is great as a long-term investor. But sorry, that was digressing a little bit. So getting back to the point, the reason why it's so much easier to build wealth long-term as a long-term investor is because if you never sell, the tax man never takes anything. If it stays unrealized, if you just buy an asset and you just hold it and you never cash out, then you have no realized gains ever, which means that your unrealized gains get to compound year after year after year without the tax man taking 30 to 50+% of all of those gains. So you're not working against government policies, but you're actually kind of working towards the way that the government wants you to make money, which is long-term investing. And let me tell you, that makes a really big difference, being able to let gains compound without getting taxed. So for example, let's take a look at a compound interest calculator. Let's say that you start with $10,000 and you put it in Tesla as a long-term investor. Now, for those of you guys who do not know, the actual core business of Tesla, the people running the company, Elon and Zach and all the people in charge of Tesla, are targeting 50% yearly growth out till 2030. This is like core growth of the company. Now, let's be conservative here and say that Tesla can only grow by 30% a year. And I'm also going to assume that long term, the stock price is going to track the company because, that's how it works long term. In the long term, the stock market is a weighing mechanism. In the short term, it's a voting mechanism. It can just do whatever it wants. But in the long term, the stock will track the company. So let's say they grow 30% yearly for the next 20 years. And for the back half of these 10 years, maybe it's a little bit harder, but in the front half, the growth is going to be a little bit faster. So just as an example, this is what we're going to use. And we're not going to deposit any more money monthly. We're just going to start with that $10,000. So this is the power of compounding. After 20 years of owning Tesla with compounding untaxed interest, your portion of Tesla is going to be worth $3.7 million. And guess how much of that is interest? How much is that appreciation from compounding for 20 years? Well, all but 10,000 of it, right? So that's $3,737,000 of investment gains, essentially, just for holding something long-term, being a long-term investor. Now let's look at how this interest gain, how the compounding really starts to get ridiculous. So you can see in the first year, it's only $3,400. In the second year, though, the interest is $8,000 total that you've gained. But let's look on this far left side for that year interest. So you can see 5 years in, you're making $11,000. So like you're literally gaining what your initial investment was in a single year. But now you start getting down 10 years in, $50K in a year. 14 years in, $162K in a year. At this point, you literally never have to work again if you did want to start cashing out some to live off of. But now let's assume that we are gonna make just as much money as a trader instead of a long-term investor, but we are gonna pay taxes on all of our gains. So this is going to change things up a lot because instead of making 30% a year then, let's assume that we are a really good trader and we're paying 50% in taxes because we just make hella money every single year. Let me quickly interrupt this video to tell you about our sponsor, FTX. FTX has the world's greatest crypto exchange, at least that's my personal belief, and they do have the lowest trading fees out of any crypto exchange in the world. Plus, they just launched a brand new NFT marketplace, which is really great. They have a ton of gaming NFTs and stuff like that. So I highly recommend checking out FTX, either the mobile app or their web app using our links in the description. And if you sign up using the mobile app and you trade crypto, you will get $10 for free for signing up using our link. And then if you want to trade using the web app, you will get 5% off their already world's lowest trading fees. So I highly recommend signing up with FTX below if you're new and want to get into crypto, or if you're experienced and just want to upgrade. Now back to the video. As a trader, let's start with $100,000. So we're gonna start with way more. However, because every year half of our gains are gonna go to the tax man, we're only gonna gain 15% yearly. So we're starting with twice as much money, but we are gaining half as much a year. Why? Because we're trading, we're claiming our gains every year, and we're paying half of it to the tax man every single year. So we are starting, remember this, we are starting with 10 times more money. We're starting with 100 grand instead of 10 grand, but after 20 years of working much harder, remember, we are having to make good trades every single one of these 20 years in order to get our 30% gain a year. So after that 20 years of super hard work, remember the other guy who's just long-term investing, he's just sleeping on it. He doesn't care if the stock goes down in the short term because he's looking at the long-term company growth. That guy, he can just rest easy, take naps every day. The guy who's working really hard, trading every day, is losing by a lot. He only has $1.97 million by the end of it. And remember, the guy who wasn't doing any work has over 3 million. Why? Because it is compounding gains that are untaxed. So that is why I am a long-term investor. You get a lot better long-term results, especially 10, 20, 30 years out. The traders can't compete with with you anymore because your unrealized gains are just compounding too much if you bought good companies. And I like being able to focus on actually like playing crypto games, you know, or making YouTube videos instead of having to focus on making the perfect trades all the time. And that's why I buy things I believe in long term. If they go down short term, that's awesome. I buy more because long term, as long as the long-term stories aren't changing, I sleep and rest easy, very, very easy every single night. If you guys enjoyed listening to my investing philosophy and you thought that listening to my mindset added some value to your mindset, then leaving a big thumbs up is really appreciated and will help out this video in the YouTube algorithm. And then if you've watched this whole video and you're not subscribed yet, well, what are you doing? Make sure you hit subscribe and click that notification bell so that you do not miss any future content. My name is Jake. You can follow me on Twitter at Jake Brawatsky, and this channel, On-Chain Gaming, is all about the future of the metaverse and how to profit off of it as an investor and as a gamer in the metaverse. I think these are two really, really exciting ways that we're going to be able to start generating real wealth in the future, and I love covering both of them on this channel. But I don't make these videos by myself. Nate, my brother, edits all these videos. Josh, our friend, does the original intro and outro music. Our agent, my other brother, Aaron, just joined recently. Plus, we have two people making thumbnails for us, so big team here at On-Chain Gaming, at least a growing team. Maybe it's not that big. So we really appreciate the support of our Patreon supporters. So if that's you, you're someone that supports us on Patreon, thank you so much, and I will see you in our exclusive On-Chain Gaming Discord chat. Until next time, everyone, have fun roaming the metaverse.